This is the Coronation Podcast.
Welcome everyone to today's episode of the Coronation Podcast. Again, my name is John Hapugo. I am your host for this session. So today's session is titled Assets Nobody Talks About, Where the Real Returns Hide. Most of us were taught the exact same playbook for money. When it comes to money, a lot of us were taught to put it in, a savings account, maybe buy a treasury bill, put some in the stock market and, hope that the market doesn't throw a tantrum. Meanwhile, there's an entire world of wealth generation that's happening completely under the radar. Big institutions, private funds, and high network individuals are making moves with asset classes that, everyday investors don't know about or have literally never heard about. So today's podcast session is to, bring to light some of those assets and help us position rightly for them. I am joined by a panel of experts from Coronation Merchant Bank and Coronation Asset Management, Gloria Anikwe and Oladele Johnson. Gloria Anikwe is an accomplished banking and finance professional with expertise in corporate banking, in relationship management, and financial solutions. She currently serves as the group head corporate banking at Coronation Merchant Bank, where she manages strategic corporate relationships and provides tailored financial solutions to clients. Oladele Johnson is a seasoned finance and investment management professional who's, dedicated most of his life to helping individuals and institutions improve their financial outcomes through tailored financial solutions. So you can see and tell that we have two very experienced experts who would be helping us, break down today's theme and helping us position rightly for these non-conventional asset classes. I'll start off with Oladele Johnson. So my first question to you, Johnson, is I think I want to go with Gloria. So I'll start with Gloria Anikwe from, the bank, from the Merchant Bank. Gloria, if I gave you 10 million right now and I said to you, I don't want this 10 million put in a bank's fixed deposit. I don't want it to go into the capital market. I don't want it to go into the stock market. Where would you put my 10 million?
Okay. Hi, Chinwe. Can you hear me?
Yes, I can.
Okay. Good afternoon to you and good afternoon to everyone on the call. So the question is quite dicey, but I'll answer it in this way, right? Investment or investment portfolios actually depends on different things. You have said you don't want it in the regular fixed deposit, you don't want it in the equity market, right? Though you don't want to buy stocks. Now, the question then becomes, what are your risk profile? What's your appetite, one, and then secondly, what's the tenure you're looking at? Because for every investment, we all have reasons why we're investing. So if I look at it from a corporate bank or a banking perspective today in Coronation Merchant Bank, besides the regular investments assets that you have mentioned, we also have our investment banking arm where we do a lot with commercial papers. Now, for commercial papers, if I would explain it, is credible clients, credible corporates actually being able to get monies from the market, in this case, not from the capital market. Well, to an extent, they're also regulated, but what happens is, as against the bank lending to them directly, because of the weight of the profile they've put on themselves, they're able to go into the market and have investors and other corporates invest in their working capital requirement. That's the commercial papers. So I can tell you today that you can actually do that. The returns would even in most instances be better than your regular fixed deposits. If you want, like I mentioned, from a risk appetite perspective, you can also do government securities, it's treasury bills, of course, and that's from a tenor perspective too, because they are expected to be risk-free. Whilst that happens, you also want to look at what your yield or what your appetite for return is. Like I tell everyone, right, your returns and the risk will just have to go hand in hand. If you want higher yields, and then of course that means your risk appetite will have to be higher. So as against going for a risk-free asset, which in this case is a treasury bill, you can do commercial papers. And for all of this, the merchant bank is poised to help you with any of your investing opportunities that you want to.
Okay, Gloria, thanks. Right. So, seeing as this thing is revolved around assets that nobody talks about, is it deliberate that retail investors don't get access or don't know about some of these asset classes and are not informed enough about how to invest in them? What's your opinion on this? And if someone wants to get exposure to it, what's like the smallest amounts or they can realistically start with if they wanted exposure to some of these asset classes?
So I don't think it's a thing of or some kind of secret, but maybe it's around size, right? So because again, some of these deal tickets are maybe a bit higher than what my regular entry level will be, or entry or point will be for maybe a regular or a startup investor. But that said, right, like I mentioned about commercial papers today that we do in the bank hovers at an minimum investment of 5 million.
Mm-hmm.
And then in multiples of 1 million. So yeah, it's not so high that a lot of people can invest into. But besides that, right, if you want to do other forms of investment too, but I think the real problem is about one, knowledge, and again, risk appetite. The regular investor today would want to feel their investments. So you see a lot of people tilting towards, in the events where they can afford it, tilting towards real estate because it's quite tangible. I can revalue it at every point in time. But there are some gaps in even the real estate that people don't see. What's the conversion rate? How quickly can I turn over my money? There are idle periods in those kind of assets, right? But when you look at these other classes, they are quite more liquid, right? They are quite tradable too. But the real issue sometimes is around information and then risk. I don't know this company who I'm trying to invest into their commercial papers, But so that's why for Coronation Merchant Bank, when we do that, we give you all the information about these customers coming from their rating. Because for you to be able to register a CP, a commercial paper program, you would have been duly rated by one of the reputable rating agencies in minimum Nigeria or in the world, right? You see, they give you an opportunity to see an extract of their financials, to see how they have fared, right? So some of these things are what would influence those decisions. Yeah, but it's not like a gatekeeping thing. It has to do with risk profiles and risk appetites of investors. There is no minimum amount to come in. Like I tell people, you can start, it's a culture. You can start investing and start saving from as little as nothing, right? So it just depends on the portfolio where you want to start with. So you start small, and then you scale to a point where you can start maybe buying a unit of the minimum unit in a commercial papers. You can then take it further to where you can start doing 50 million investments, and it depends on the type of, and I'm sure Oladele's type of asset class would have different entry points too. So there's no minimum amount for it. Just if you have those funds, it now depends, and it helps us decide where you can invest in. And who says there are times when you can come into a pool as against bringing in a minimum amount, bring it into a pool and invest in a particular type of portfolio. So in Coronation, that's what we do, and nobody is left out of it. The only thing is that we ensure that we're able to fit your monies to the right portfolio and ensure that the yields are also quite rewarding. So I think Oladele will just also try to give you perspective. He's right here now, and I think he will be able to speak.
Thank you so much, Gloria. Thank you so much, Chinwe. Right. So I would say that the types of asset classes, right, that I currently trade on a weekly basis quite frequently. We have alternative asset classes, with instruments like infrastructure funds, real estate instruments, real estate investment trust schemes. So for example, let's take the infrastructure fund as an example. So basically what happens is what the businesses who are looking to raise capital are involved in is expansion or infrastructure projects, stuff like transportation, social infrastructure, telecommunication, stuff like that. And they come to us as asset managers, right, to raise these funds. And of course, what then happens is we then, have pool of funds, from various investors who provide, the funding for these investments, right? Funny enough, a number of these funds are also listed on the exchange. The idea is to encourage public participation and also financial literacy and understanding. And just like we have it, we have our Coronation Infrastructure Fund as well listed on the exchange, and who we just launched the second series of our investment fund. So these are just a few of the asset classes that might appear not to be so popular out there, but that we find ourselves engaged in. Thank you.
Right, thank you, Dele. So speaking about these asset classes, right, and how they're not out there, so to speak. What's the most common, or what are some of the most common misunderstandings that people have about how these products generate their returns? Say, for instance, the Coronation Infrastructure Fund, for instance. What are some of the misconceptions that people have about the returns that are generated from this type of funds? And if someone were to come to you today now to say that they want to invest in these funds, what are the most basic things they need to know so that they don't get burnt, quote unquote?
Yeah, so thank you so much. So typically people assume that the fund manager somehow will beat the market through some skill or magic, right? Really what happens is that the returns come from various mechanics, right? How the safe leg and the option, the safe portion of the investment, the option portion of the investment as well, pretty much a combination of both come together to provide the clients with the returns and the investments that they have made, and the idea, the plans that they have, right? So for example, right, with the structured products, I would say that what structured products does, or what it does for the investor, is that it solves the question of, I want an upside, but I cannot take the possibility of losing some of my investment. I cannot take the possibility of losing some capital and the likes, right? So with a combination of both secure investments like say treasury bills, right? So I'm talking now about having a structured product, right? Treasury bills, say you have a 10 million and a 9 million portion of it is invested in treasury bills, right? Which gives you, the idea behind that is to give you the safety that you need to ensure that no matter what, the capital that has been invested does not deplete, right? And then a portion of it, say 1 million, now invested in other asset types like, say, equity, for example, which has no ceiling as to how far of returns you can get, right? So the idea basically is to bring both types of investment to one bucket, and that's pretty much is the idea of the structured product. I don't know if that answers the question.
Yes, it does. So you're saying to me that if it were your own personal money on the line today, you would actually allocate it to these asset classes that we just discussed?
Yes, very much. Another challenge that people might have, or your typical retail investor, is the lot size required. So a number of these investment types usually require minimum investments, right? Or a minimum investment amount, right? And that's part of the reasons why, for example, like I mentioned about the Coronation Infrastructure Fund, that's part of the reasons why some of these funds are also listed out there so that people can even participate as best as possible in trickles.
Right. Thank you. My next question goes to Gloria. What's the one question that any investor who wants to have exposure to, a structured asset class like this, or private credit, or any of the other asset classes that are unconventional? What's the one question that you think they should be asking, or a couple of questions they think they should ask to get clarity on entrance, and stay with the fund?
So for me, I don't think it's one question, right? Like I mentioned, you really need to profile each of those asset class, and also match it to your expectations. Expectations coming from a point of risk appetite, expectation coming from a point of tenure. Because sometimes, again, you have an objective for savings, right, or for investments, and those objectives must tie into the portfolio type. Now, so for instance, if you have, and then again, the liquidity positions of those type of portfolios. So let me give an instance what I mean by liquidity, right? If I want to do maybe a private credit, and Oladele has explained the private credit because it's really done from our Coronation Asset Management arm. A private credit is quite more unstructured and informal, if I would explain. And then that means that it's not as liquid as, say, for instance, a fixed deposit that can come from the bank, or any other money market investment. So basically what it means is that if I need my money in the next 60 days, I won't go and tie it into a credit portfolio, or I won't go and tie it into a private credit that is for 90 days, because that means I'm locked up for 90 days and I'm not able to come out of it because they are not tradable in the secondary market. But if on the other side I buy a treasury bill, remember that if the upside for me or my objective is yield or returns, right, that means the private credit will pay me better than, say, it's a treasury bills, right? Because treasury bills are maybe a bit lower in yield than a private credit, but it's more liquid. So the question is, if I want my monies, or I want to come out of that investment in a shorter period, do I want to go for, you need to now match your investment type or investment class to those tenures or the liquidity position, such that in the event I need my monies, right, I can actually trade it out. I can trade it in the secondary market and get my funds, as against tying it up in liquidity. So for me, the question to ask is, how do I go in and come out of an investment? What's the returns of the investment? Of course, the higher the returns, you know that the risk profile of those investments differs. Do I want a risk-free type of return? What's my risk appetite? Because there is no, like when we say it is risk-free, right, it doesn't mean it eliminates the risk. it just weights down the risk per portfolio. So those are all of the things I would have to consider, or I would advise that an investor ask. And it would also be nice, I'm sure that on each of our platforms, we put out some of those informations that speak to the type of investments that we have, or the class of investment portfolios we have within the Coronation Group. And in doing that too, you have access to the contact names or emails where you can send in your request for any form of inquiry that would also give more clarity to it. Thank you.
Thank Gloria. Johnson, my next question will go to you. But before that, please, if you have any questions, comments, remarks, feedback for our speakers, you can kindly drop them in the chat box on this space. And then we'll have our moderator read those questions or feedback back to all of us. Dele, speaking about asset classes, please can you highlight a couple that we have today, open today, available today, that prospective investors can tap into? If there are any specific requirements for each of these asset classes, please help us. Please inform the room so that everyone's in the know.
In terms of assets that we have available, right? We have private credit. We have, like I mentioned earlier, we have infrastructure funds. We have structured funds as well. Typically, these investments usually require, compared to what a typical retail investment would require, it usually requires some level of significant flows. So I would take, for example, the private credit, right? Or the private note, right? So typically what happens is, like Gloria mentioned, with the treasury bills, you're lending to the government, right? And it's standardized, it's liquid, it's publicly traded, but with a private credit, right, you're lending your money expecting some form of returns, or you're lending to a company, right, mostly mid-sized businesses like manufacturers, distributors, agri businesses, importers, and the likes, right, who are maybe too small for a bank's comfort, right, or might need the funds much quicker than a bank might process those funds, right? So they would typically need as quick as possible funding, right? And they come to us to get these funds, right? It's a bit less structured compared to what it is in the bank, right? And the notes are typically negotiated privately, and like I mentioned, they are not publicly traded. They are not particularly open to the market like you have your commercial papers, right? And the terms for these these notes are custom built, right, for the specific borrower in question, right? So, and I mean, with the private credit, for example, we can move very fast within weeks, pretty much because we're underwriting the actual transaction, we're underwriting the collateral, as well as the credit score, and that pretty much is it. So I mean, there's so many avenues for making investments, alternative investments. I don't know if that answers your question. So please confirm that answers your questions.
Yes, it does. Thank you. Gloria, do you have any additions?
Well, so, when Oladele is speaking about private credit, right? It will also be nice for us to just break it down. For us in corporate banking, we like it to be, Oladele is speaking long English, so basically for anybody listening, I want to really understand what a private credit, right, is. Basically, it's today as against going to the bank, right, to borrow monies, as against a bank lending money to a corporate or to anyone using depositors' funds, right, which in some instances, maybe the dynamics and structure is more standardized, like he mentioned, and usually, of course, it will go through a process of approval. I can decide to say as a borrower that I don't have that time to wait. Maybe there's a specific transaction that I want to quickly go into and it's time bound. And then the corporate banker or the affluent banker is saying, oh, I need this level of time to go through my management credit committee and board approvals and all that. The asset management team using this same private credit. Now, what the private credit is still same level of depositors, but in this case, maybe a nimble class of depositors who have come together, invested in that portfolio. And that portfolio is now used, it's still depositors, but in this case, not the standardized or NDIC regulated deposits of the bank, right? This is just a small size of depositors whose funds are now used and invested in different vehicles. And one of the vehicles will now be the private credit, right? So they fund this same person I'm not able to fund in the bank because of maybe structure or timelines, right? So basically that's what the difference is. It's still depositor borrowing money to a corporate or anybody needing money for business or for anything, but it's not coming from the bank's perspective. It's not coming from an asset management perspective where the structure is a bit leaner and then the timing also leaner, right? What it also does is that basically, I want to believe, and Oladele can correct us, that if, say, for instance, the fund is a 6-month fund that the depositors have brought, and the borrower is to take that money for 6 months, you might not be able to pre-liquidate it without, say, you have finished the use of the money and you want to return it. I don't think it's that easy to come and break that chain of funding as against the bank type fund where you can actually pre-liquidate your loans, right, or your borrowing without maybe a penalty. So that's why it's, it's simpler, is more timely, right, and a bit more unstructured, but of course it has its own different features. So it just gives you opportunities to be able to diversify your either lending or investing opportunities, but it's also important to understand the difference and the features. And that's where sometimes, again, you see a lot of misunderstanding, and that could even lead to service issues, because as a financier or an investment company, or you need to explain to your clients the different features of your product. And that's one thing we don't take for granted in Coronation Merchant Bank and in Coronation as a whole, right? We ensure that we're very transparent and make your customers understand, as against what is even written, is also explained, make customers understand the various features so that you make the right decisions for either your investing or lending opportunities. Thank you.
Thank you, Gloria. So we have a couple of questions here that have been thrown at us. The first one says, infrastructure takes years to pay off. In the markets where people want quick returns, how do you convince someone that patience is actually the strategy?
Thank you very much.
I'm not sure which of you wants to answer that, but yeah.
Okay, Gloria wants to go.
So that's why you have the opportunities that we've put on the table. Infrastructure is just one of it, and it depends on your investing objectives. So today you see people that are investing long term, right? So I can decide to say in the next 5 years, on the next 10 years, I want to be able to lock in funds for this period and for this use. right, is different from the monies I want to invest short term. And short term means for me 3 months, 6 months. I can decide to say, okay, I want to invest short term, and the returns of this investment, I want to use it for my holiday. I can decide to say, I want to invest maybe in the next 5 years to buy a house in Ikoyi or Banana Island. So it depends on what your investment objectives are, and that's what helps you drive the kind of portfolios you invest in. So today, like I mentioned, in the bank, in Coronation Merchant Bank today, we have investment opportunities coming from either a commercial paper, which are short-term, or bonds, which are long-term. From the Coronation Asset Management, we have the infrastructure fund and every other type of fund, which could either be long-term or short-term. So, like I would always say, when it comes to investments, 2 things are very important. What's your investing opportunity? What's your investing objective? And what are your risk appetite? Those are what will drive where you put your money. But in all of that, be sure that we're here to guide you to make the right decisions, so long as we understand what the need and your requirement is. And we'll work with you to make that work. So I'm sure Oladele from the asset management side will have other things that he can add to it, and that will help you drive some of those decisions.
Thank you so much, Gloria. I was just going to even add that yes, for example, you can say that the infrastructure fund is a long-term fund, right? But then, if you can recollect, I did mention that we have a number of these funds now publicly listed, right? We gives opportunity for individuals and corporates to be able to trade the holdings of the investments that they have, right? So, for example, the Coronation Infrastructure Fund, using as an example, is listed on the exchange, right? So, as much as, yes, you can see infrastructure fund investment types are long term, you can also trade some of these types of investments on the exchange, and you can be able to get liquidity when you need. One of the key things that I tell investors, right, is that in investing, it is very, very key to understand your liquidity requirement, or liquidity need, right? Because the moment you put yourself in a box, right, sometimes you find yourself stuck and you're unable to come out. So understanding your liquidity needs, being able to explain and express your liquidity needs and requirements to your advisor, right, who then comes up with a portfolio of investments that will suit you as an individual or as an entity. I think that will help. I think that will help. Thank you.
Thank you, Dele. Second question here is, what's one asset class you think is slept on right now but will be huge in the next 3 to 5 years?
That's a very, very interesting question. We just touched on one, right? Which is the infrastructure fund. We just touched on that, but I would also touch on something that I typically would call a structured product, right? Now, what does a structured product do, right? Structured product pretty much gives you that opportunity for a limitless upside, right? Whilst as best as possible providing some form of preservation for your capital, right? So with a structured product, it's unique, right? It's unique to the entity involved in the investing. It's almost like a coming together between the investor and the person, the asset manager or the investment manager, coming together to build and curate something that is unique, right? Unique to the client, and providing the returns that the client seems or looks forward to having, right? And like I said, structured products, they are very limitless, right? With a structured product, you can be exposed to foreign FX investments. You can also be exposed to derivatives, right? And you also possibly can be exposed to some of these digital assets, right, that are becoming quite as popular as day and light, right? So thank you. I hope that answers the question.
Right. Last question, third and the last question is if you were starting your investment journey from scratch today with a limited budget, which non traditional assets would you look into first?
If I was starting my journey right now, which non-traditional assets?
With a limited budget. Emphasis on that.
Yeah, I will still say something structured, right? I'll still say something like a structured product, right? That will be exposed to, infrastructure type investments, that will be exposed to real estate investment schemes. Because with real estate investment schemes, what happens is it's a pool of investments or pool of monies, right? That provides capital for real estate type investments, right? I would also put a portion of the fund as best as possible to hedge against currency risk. I'll put a portion of the fund in foreign exchange type investment, but maybe I allow Gloria, say one or two things. No.
Okay. Oladele will speak more to some of these classes of asset, but from a regular banking perspective, right? We've mentioned some of those classes of assets. So when he says the non-conventional, he's spoken more to it. Now it depends on what the budget is. Then what kind of returns you're looking for again, right? So today you have a lot of equity tradings being done. Do you want to look that way? Do you want to do, it depends, like I mentioned, you can even have, so if I say today that commercial papers are trading at a minimum deal size of 5 million, and I've had it around with my young colleagues, you can actually pull funds together, right, and invest in it. Now, because they are short term, most of the things Oladele would have mentioned to you from are majorly long term. If you want it short term and say, okay, this is how I want to, and then I build or recapitalize my interest to also improve my capital, you can invest in commercial papers. And where maybe you don't have the volume, you can pull funds, right? And it's mathematics. I can always compute what the yield or what my return should be and spread it across the people who or your co-investors. So basically, this thing is really a thing of culture, right? The first thing is to imbibe that culture of investment. And then there is also the waiting period. You have to be patient, especially if you want to actually build portfolios. Portfolios are not things you go in and come out. You have to be very patient. And that's why it's embedded in a saving culture. You must have it as a culture, right? And because sometimes you have to wait it out. So for me, my advice in most instances is, what your spending profile is, what your investment profile is, right? The kind of risk you are able to take, because you see a lot of corporates today who have really done well. A lot of them have taken risks. There's usually some up and down side to everything we do. So there is risk in every form of investment. You need to understand it, understand what you're able to take, right? And then that would help you to guide your investment decisions. But one thing I would say, right, it's I think knowledge is very important. So and that's one of the opportunities that this podcast helps listeners and our customers do, to understand what is available, to bridge gaps of those kind of knowledge deficiencies that will make you take wrong decisions. And we are open at every point in time in Coronation to guide. And Chinwe, I don't know if and I'm sure that goes out a lot of times of the various funds we have and how they fed over the period from an asset management perspective, and even for the merchant bank, where we put out a lot of commercial paper programs. I see sometimes people ask to say, oh, how do I come in? Most of those informations are either hosted on our on our LinkedIn page, or other platforms, and even in most of the flyers that go out. So it will be important for us to also look out for some of those informations, and where further inquiry is needed, we have contact details that has been hosted there for you to call and make your inquiries. And we're always happy to help you grow your wealth in Coronation. Thank you.
Thank you, Gloria. Thank you so much. That was very detailed. So we've come to the end of today's podcast session. Again, it's been titled Assets Nobody Talks About, Where the Real Returns Hide. I'm sure that before now, a couple of us didn't know anything about private credit or structured products or infrastructure fund, all of that. But now you're leaving this space, with some knowledge and how to go about this. So if you're looking to, start your journey with any of these asset classes, please reach out to us at www.coronationg.com. Visit our LinkedIn pages, our website, X page, or Instagram. And, you can always contact us at our email address, marketingcoms@coronationmb.com. And if you're looking to take the next step, we're always available to, tailor something specifically to you with the guidance of a personalized investment manager. Thank you all for joining this session and for being curious enough to sit in it, all through the entire session. So go find out where your own returns are hiding in the Coronation Group, and we're always happy to help. Thank you, Gloria, and thank you, Johnson, for your thoughtful insights. We'll see you on the next episode. Thanks. Bye.
Thank you so much.
Thank you. Bye. Chinwe.
Bye.
This is the Coronation Podcast.